just about 5 days to go before the inauguration. I wanted to hit on a couple of key touch points. Republicans are going to take over the presidency, the House, and the Senate. And we do have a significant tax bill that's set to sunset at the end of tax year 2025, at the end of the year, calendar year 2025. And there's been a couple of proposals that have been kicked around. One of the items is SALT, state and local tax deductions. During the Tax Cuts and Jobs Act, this was capped at $10,000. So what this includes is your property taxes on your home, if you have them in your particular state, any state income tax that you pay on your salary or your wages, as well as any other various local taxes that may be around in your area, is capped at $10,000. Now, a lot of people end up spending more than that in their state and local taxes, but they're capped at 10. That inclusive of a married filing joint, you're still capped at 10. Single taxpayers as well are capped at 10, and married and filing separate, the amount gets split, so you get $5,000 each. So again, this causes a lot of people to have to take the standard deduction. Now, not to say that the standard deduction is anything bad or anything wrong with it, but you're just not maximizing your tax savings through this cap of the state and local tax deduction. So I think this is definitely going to be something that's going to be, pushed, and I think Democrats can get on board. The biggest area here that I see with it being held up is just a simple fact of how is it going to be funded, how is it going to be paid for. So I think both parties can get on board, because if you kind of take a look, there are a lot of states that do actually have a lot of this. Kind of your outlier states that maybe won't get on board will be like Florida, Texas, probably looking at Tennessee, those sort of states that really don't have a state income tax, so they don't really tax your wages. So a lot of people, you have property taxes, but again, it's not going to be anywhere near as much as what it's going to be, if you also had an income tax. So that's coming up. So there is a group of 5 Republicans that are proposing that. They're proposing a bill to reasonably adjust. So now the question is going to be, what is reasonably adjust the state and local tax deduction? So we'll kind of wait and see what happens with that. I think if that does get increased, a lot of blue states will benefit from that. And, I think a lot of people would be on board, and you'd push a lot of people back to itemizing away from, the standard deduction that a lot of people currently take. We'll keep in mind, so a lot of this news is up and coming, and it's coming out, quickly. So, I project as probably next week and the next up and coming weeks for the remainder of the month of January, that there is going to be a lot of news on the changes to the tax laws, and I'll try to keep everybody up to date on this. Again, so if you guys find this information useful or helpful, please like, subscribe, and share my videos. I would appreciate helping support my channel. I'd like to keep coming out with these videos. So again, let's talk about some of the things that is going to set to sunset in the end of 2025. So top tax rate is going to go up. It was originally at 39.6. The Tax Cuts and Jobs Act dropped it down to 37%. So that'll go back. So a lot of these sunset provisions is what was in place prior to the Tax Cuts and Jobs Act of 2017. So it's kind of everything's going to go back to the way it was. It was going to reverse. We'll kind of talk about this to kind of refresh everyone's memory, because we're approaching about 10 years off on this. So again, you can file this year with these provisions are still in, next year with the provisions still in, and then if nothing is done, then these provisions will go away, and it'll divert back to what I'm discussing right now. So standard deduction, that was almost doubled. So again, we're talking about, it was $12,000 prior to this act, and $12,000 for single filers and $24,000 for married filers. Again, the Tax Cuts and Jobs Act had significantly increased that amount. So now this year we're at about 14,600, again, which is that's indexed for inflation. So this will probably end up getting cut in half, as the standard deduction was not anywhere near that high prior to Tax Cuts and Jobs Act, as well as then you got 29,200 for married filing joint. The other item, again, as I had mentioned, is a SALT tax deduction. That's capped at $10,000. So again, that would go away, and that cap would be gone. There would be no cap on it, so it would be, you can deduct as much as you wanted as long as you itemize. Mortgage interest deduction. This one, again, doesn't impact a lot of people, but the prior max threshold was $1 million for your primary residence home. So as long as your mortgage did not exceed $1 million, you were able to deduct 100% of that mortgage interest. And then you were also able to deduct plus $100,000 in an equity loan if you used it to improve your property. So a total of $1.1 million. Tax Cut and Job Act had that at $750 cap. So again, as real estate prices go up, you're probably got a lot more people that are at the $750,000 range than we had in the past on a home mortgage. But again, not that many people are probably vastly impacted by this. The other area that has a pretty big impact is the miscellaneous itemized deductions. This was eliminated during the Tax Cuts and Jobs Act, and this again was a lot of these items were that had to exceed 2% of your adjusted gross income. This was like unreimbursed business expenses, so that would be if you're an employee and you had a home office, you could deduct that. If you traveled for any unreimbursed mileage, you could deduct that. And again, so those were items that would also probably be beneficial to some individuals. But again, who knows? You'd have to actually physically sit there and do it out and see which way you'd benefit, because as you get a greater standard deduction, your itemized come down and vice versa. So again, so some people would benefit, some would not benefit. It's kind of the luck of the draw. Child tax credit will go back down to $1,000. It is at currently $2,000. So again, it would go back to pre-cut Tax Cuts and Job Act amount. Personal exemptions, these were suspended in 2017 under this. They will return, and that would be projected to be about $2,000 per taxpayer. Again, it's probably be adjusted for inflation and maybe be somewhere around the realm of about $4,000. But again, to be determined. And then as well as the alternative minimum tax phase out, the Tax Cuts and Jobs Act increased this phase out amount, and that will come back in. And then some business tax provisions. So again, the corporate tax rate fell to 21%. It'll go back up to 35%. There was also a qualified business deduction, which was 20% of eligible pass-through entity income. You'd get a 20% deduction, as well as increases to bonus depreciation. I won't go into too much detail on that. And then finally, the estate and gift taxation, that pretty much doubled from about $5.4 million to $11.1 million per person. So that would go back down to pre-Tax Cuts and Jobs Act levels if nothing is done. But again, the way this administration is looking as of right now, as of today, as of January 16th, 2025, is they are going to look for some permanent fixes to this. They're going to want to put a lot of these provisions in permanently. Some other items that they're going to look to do, again, so if anyone's looking to do energy efficient improvements to their house, to the solar panels, heat pumps, purchase a EV vehicle, they're probably going to look to reduce those incentives to help cover this cost of the tax cuts within this act, or within the act that they're going to propose going forward. They also want to exempt overtime pay from federal tax. They also want to end taxes on Social Security benefits. They want to, like I said, raise the salt tax deduction, which is something that I had mentioned. They want to increase the tariffs on goods. Now, this is one that's kind of been controversial. The Democrats say, well, you increase tariffs, well, guess what? The price of products is going to go up. The Republicans say, well, nope, you increase tariffs, well, we're going to keep jobs in the U.S., and companies are going to be forced to bring their operations back into the U.S., bringing more jobs over here, which could potentially result in a short-term increase in pricing, but in the long term, it may not. So again, subject to interpretation, and we'll kind of see how that ends up playing out. But those tariffs are probably going to be a real thing, as he put tariffs in place when he was in president the first go around, and that seemed to help with jobs as well. And then, again, like I said, I had mentioned before, so he's going to eliminate some of the clean energy tax incentives, more than likely to help cover the plan. And then the tariffs would also help cover the plan as well. He wants to make the estate tax cuts permanent. So again, we'll kind of see where it goes. It's a moving target. I'll keep everybody up to date as news permits itself. But, again, just kind of wanted to, as the new administration is coming in, just wanted to make everybody aware of what potentially is coming down the pike, as well as now we're getting really close to these items expiring, and then a lot of people are going to be subject to a large increase in their tax bill at the end of the year, come 2025, or come when you file your 2026 tax return. So again, if you guys like this video, please like, subscribe, and share your video. And again, appreciate any feedback.